Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, August 11th, 5:16 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. You can see this over here on the trend gauge in the upper right of the screen. Neutral leaders upgraded last week from neutral to up after some good action by leading stocks during this uptrend. Now, onto the 5 indexes that we track versus their moving averages. All 5 are trending higher above their uptrending 21-day exponential moving average. That's the short-term trend, so we're fine there. All 5 are trending above their uptrending 50-day moving average, so we're fine there. Still remain below the long-term 200-day moving average. Made a little bit of a run into it over the last couple of days. Had some positive inflation data with CPI on Wednesday and PPI on Thursday before the market that indicated at least a slowdown in inflation. But 2 gaps up in a row is a little too much for the market. So what just happened today? Second gap up on the PPI data, but then a negative reversal led lower by growth stocks. I watched the ARK-K, which is one of the G6 components, go from up nearly 4% at the beginning of the day to end the day down 3%. That's a big reversal. The rest of the components did pretty much the same thing. We saw it in the NASDAQ 100 and the S&P 500 also. So maybe we just went a little too far too fast, and it's time for a pause. And we'll take a look at some questions to ask that might help answer that question. So on the day, the G6 down negative 0.4%, S&P 500 gapped up 0.7, closed red, down 0.1%. NASDAQ 100 gapped up 0.8, continued higher. Hard reversal, down 0.6% on the day. Dow Jones Industrial Average positive by 0.1%. Mid caps up 0.6. Russell 2000 up 0.3. Global Diversified 60/40 stock and bond down 0.2%. GROTECTION down 0.6% on the day, lagging. I don't like it when I'm lagging. I have kind of a checklist that I go through with my holdings to try to get to the bottom of whether or not I'm lagging. And I'm going to go through that checklist today on 4 stocks that are in the portfolio that had below average days to see if the behavior is normal or something to be concerned about. That's going to be a kind of an education topic today. We'll also go through the tail of the tape and charts of interest. And let's get going here into the details by taking a look at the indexes. But let's talk about what we do at Revere and why we do it. We are trend followers. That means that when the market is in an uptrend across the three time frames that we track, means we want to have as much invested in the market as we are comfortable doing. And a good example of this was October, November of last year, where we're trending higher in the short term 21-day, the medium term 50-day, and the black line, the 200-day moving average. They're stacked in this order that we want them to be, and we're trending higher. On this chart today, I've got a 150-day moving average. We're going to get to that in a minute. When we start going sideways, breaking through some of the shorter-term moving averages, we let our stops get hit. We let the market take us out. We don't guess. Our stops get hit. New buys start to maybe not work. And when we get below the short and intermediate term, we like to take off some of our index exposure or hedge it. If things start to get really bad, like kicked off at the beginning of the year, we break the lower time frame indexes, then we break the long-term indexes. This is the first time we went to cash today. This year was January 24th. We've been in and out several times this year, depending on what the market was telling us to do. But the big negative in the market was on April 21st, when we tried to get above the 200, had a hard negative reversal, and then a big leg down. And then we had some bad CPI data 2 months ago that caused another leg down. But now we've been rallying for about 3 to 4 weeks, but maybe we went a little too far too fast. You can see The gap up here, let's take a look at the 5-minute chart for the S&P 500. You see the gap up, and we ran higher into this 42.58 area. That got us above the 150-day moving average. That's the 30-week moving average. If you're familiar with Stan Weinstein's work, he pays a lot of attention to the 150-day moving average. But we got back above it and reversed lower. This is kind of a normal point to pause, considering how far we've gone straight up into the moving averages. Recall we paused in this area at the 100-day moving average before conquering it. The next big moving average was 150-day, and this is where we're pausing for right now. We'll see the action of stocks. We'll see how growth compares to value. We'll see what sector rotation takes place, and we'll look at the action of our individual holdings. So that's kind of how we treat things, going with the trend, with the market, and with leading stocks if the market has the wind at our back. And if you're interested in this approach, getting more information about it, reach out to me. You can email me, don@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. We'd love to talk to you and answer your questions about our trend following approach. So that's the S&P 500. Let's go to the NASDAQ 100 as we'll review the 5 indexes. First, same situation here. Nice rally off the bottom. What did we run into? The last 3 days, three of the last 4 days, we ran into the declining 150-day moving average and paused, gapped up above it today, closed below it. We put a hedge on when we had this negative reversal in the break of the 150-day moving average today, and just to reduce our exposure a little bit while things play out, because it is 4% down on the NASDAQ 100 to the 21-day moving average, so we could suffer a little bit more pain. Hopefully we go sideways, let the moving averages catch up to it, but we got to be prepared for all situations. So that's the NASDAQ 100. Dow Jones Industrial Average, positive on the day, sitting right above. Look how close we got to the 200-day moving average today, within less than 1% of it, but we reversed. Still finished positive on the day because, again, not as much growth in the Dow Jones Industrial Average, sitting right on top of the 150-day moving average. Mid caps. Oh, look at that. Guess what touched the 200-day moving average today in reverse? The mid-cap index. Not so fast. Second close above the 150-day. Relative strength over the last week and a half. We've been seeing that with mid and small caps, which is clearly a positive for the market. But this is the first of the indexes to come into the 200 and fail. Let's go to IWM. Almost to the 200, didn't quite get there today, but a time for a reversal also. Kind of normal, not a surprise. The mid caps and small caps got there before the large caps did, but they all reversed along with that, and growth did a reversal also. Let's go to the IWO. Not quite to the 200-day moving average. Let's go to IWN. This is the value half. This got above it firmly before the negative reversal today and closed below it. So value led growth today. I already mentioned how growth lagged. Growth lagged also on Tuesday, but it led big time on Thursday. So the baton going back and forth between growth and value on these within these indexes. So let's go to the tail of the tape now and knock out a couple of things here. No change on the headwinds or sentiment. Nothing needs to be discussed anyway. PPI was negative, actually. This is the producer inflation, lower versus expectations that it would be higher, confirming Wednesday's CPI story of peak inflation. We're obviously going to need some more months of data to confirm that, but that was positive. It fueled the gap up, but we couldn't hold it today. But granted, we were extended, so now we try to determine if this is normal, the pause that refreshes, or are we going to have a hard pullback with people locking in some profits after this nice move off the lows? The NASDAQ actually reached 20% off of the lows. I heard people calling, hey, the NASDAQ's in a bull market. I don't think you can just say because you're up 20%, that's a bull market when you're not at the highs. Anyway, some notes today. Oil's breaking to recent highs with volume. We added to our LNG position that we put on yesterday. Tons of good oil setups, got a lot of alerts today, and there was volume behind it, so we got to pay attention to energy again. At 2 o'clock, rates and the UUP hit highs of the day. We actually started lower on the dollar, but it turned with some strength, and then rates were at the high of the day. This is when the market hit the lows of the day, so that inverse correlation, something we still have to pay attention to with rates and the dollar versus what's going on in the overall market. So coming into today, my expectation was either bullish or neutral action after the CPI breakout. I would say normal action in the indexes, but you never like to see a negative reversal off of a gap, but that's what we got. So mildly disappointing today on the expectations. Telling myself coming into today, don't chase. I'm going to take an example if we see monster gaps up, and don't own too many stocks. I don't want to own more than 12 in the portfolio to go with SSO, and I was at that limit today. We did get a monster gap up, and it turned into a really bad experience today. We're going to go through that. Here's the levels that I was watching today, support and resistance. We got above resistance both on the S&P and the NASDAQ 100, but then reversed below it. We pulled all the way back to this top of this support area, this 4,200 area on the S&P. So we don't want to break this. We don't want to go below 4178. That would indicate that the breakout, the CPI gap up was probably a trap for the bulls, and we could be heading lower. So keep a close eye on that 4078 area and this 315.59 fib on the NASDAQ 100. So leading sectors today, I already mentioned oil, retail coal, XME, and ITB, the home builders. The dollar went from negative to positive. That put a halt to the positive action, and the markets reversed opposite of what the dollar was doing. Bonds down big today, solar taking a break, so some recent leaders, TAN and biotech taking a break. Software took a break, gold and gold stocks also in the red. So portfolio changes today. I didn't include this in there because I just plain forgot. So LNG, pre-market, we were noticing it was going to gap up above our pyramid level. We added 2%. This is a good time before we go into, actually, we'll review the portfolio and the bottom line, and then I'll go into the 7 questions. I sold our 6% stake in T-Mobile, TMUS today. Bought Bros, big gap up, huge volume. This turned into, this is why we take 2% positions to start out with, because look at this negative reversal on Bros. Let's go to a 5-minute chart. Everything was the way we wanted it to, going up higher, pulled back to, when I saw it pull back around this 52 area, that's where I took the position. It bounced around there a couple times. 52 gave away. That was not good. Bounced all the way down here, back up to 50. Now 50 flipped, it seems like, to resistance. We rolled over and closed at 46. So we took a 2% position, sold half of it on this second rollover after it failed at 50. So I think it's we're right at a 0.2% loss combined with the 1% that we're still holding, and the 1% that we sold. Never like selling something the same day we bought it, but you got to respect risk. So we sold TMS, added LNG, bought and then sold half of a small Bros position and put our hedge on QID 10% on the NASDAQ 100 with this negative reversal below the 150-day moving average and into the gap fill in yesterday's candle, which was the CPI gap up. We did note yesterday subtle lagging in the NASDAQ 100. Look at the relative strength line here. This is actually the 5th session where this has been lagging. We didn't get above Monday's high in the NASDAQ 100. We did in all of the rest of the indices, but we didn't on Wednesday with the CPI gap up. We did Thursday get above it, but came back into it. So subtle laggardship here in big cap growth with the NASDAQ 100. So bottom line for today, well, our beta with the hedge took it down from 1.23 to 1.0 even with the market. Too far, too fast is the bottom line. Gap up and negative reversal fueled by growth. You can see this 150-day moving average that we added to the key levels. And above it and reversed there today. We also added this 50% retrace of the decline level, 42.28 to 42.32, whether you go by high to low close or high to low print. So this 42.28 to 42.32 also came into play today. We got above it. The high was 42.57 and it failed also. So this comment belongs here also. So there we go. Now, today I mentioned I sold T-Mobile and we underperformed today, and I always want to know why we're underperforming. So is it normal or isn't it? So this is a kind of a series of questions that I walk through when we come up to this situation, and I'm going to bring up T-Mobile first and then 3 other stocks that underperformed in the portfolio today. So T-Mobile, we bought this gap up on earnings and it's trending higher, lower. Everything looks fine here today with T-Mobile, right? Well, outside negative reversal yesterday, not really a fan of that. And it was lagging yesterday also, not showing on here, but let me put it back on here because we want to keep an eye on the 8 EMA for individual holdings. Wish MarketSmith allowed you to configure more moving averages, but I got an alert that we broke the 8 EMA on T-Mobile today, so I went and took a look. We're up on this a little bit, but we're not up as much as the S&P 500 since we bought it. You know, one of the things I say is I want to buy something that's going to outperform the S&P 500 by twofold. Otherwise, I can just buy SPY or SSO. But if you're underperforming the S&P and there are other stocks that are acting well, there's no reason to hold a laggard. So that was why we sold our 6% size in TMUS for a small, about a 3% gain. The S&P was up about 4.5% during that same spot. So this was really question number 7: is the stock lagging since purchase? So my portfolio was lagging today. We're behind the indexes. I want to know why. Is it normal? Questions to ask. First question, and first let me show the 3 stocks that lagged today. We're going to start off with Silvergate, and we're going to go through these questions. So Silvergate, it's got a pretty wide ATR. It's a bucking bronco. It's been riding the ADMA. Let's go through the questions. What were the leading indexes doing today versus interest rates and dollars? So first of all, we saw that negative reversal. That didn't really factor in to what's going on with Silvergate today because it was lagging right out of the gate. So what's leading or lagging today, growth or value? Very clearly, growth lagged right out of the gate. So that's a strike against Silvergate. What is each stock's sector doing? This is kind of a unique sector. You can't really compare it to a bank. It's a crypto bank. Crypto also had a negative reversal today along with the indexes. So although crypto finished positive on the day, Silvergate reversed along with crypto, so that kind of explains that. So far it's normal. What is each stock's volume versus average? Well, volume wasn't an issue today. It's 43% below average. So far it's normal. It's price extended versus the key moving averages. Well, it's right along the ADMA, and that's what it's been doing. And it's pulled back to it several times, so that's normal so far too. What is the stock's daily range versus the ATR? You can see just by eyeballing the candles that there's nothing abnormal about today's range. And then I said, is it lagging since purchase? This definitely isn't. Just one of those days is what I chalked this up to on Silvergate, down 3%. It's just one of those days. The indexes were doing better, value-led growth, and it's a normal pullback. We're still above the ADMA, so no reason to blow out Silvergate. Let's go to the next laggard. Let's go to Net, which we bought yesterday. Actually, I think we bought it on Monday, actually. So Monday here, it gapped up on Friday. Big, I like these big earnings gaps. It's just a hallmark of outperforming stocks, and if it doesn't work, your stop below the low of the gap up day is a small price to pay for an entry into the stock. So we bought it on Monday. Normal pullback on Tuesday, Wednesday, great participation, new high along with the market, and now today down 4.6%. So is this normal? What are the indexes doing? The behavior of the indexes just didn't really apply today. The indexes are having the inverse versus interest rates in the dollar, so one didn't really apply today. What is leading or lagging today, growth or value? Net is clearly a growth stock, value led today, so normal behavior. What is the sector doing? IGV and SKYY, that's cloud computing, they're lagging today, so that kind of explains what net is doing. What was the volume versus average? Well, I was happy to see the volume 18% below average, and it was below average all day, so that's normal also. Is price extended versus the moving averages? Yeah, you could say that because it was gap up and continuation, but that was the risk that I took when I got into it. What is the stock's daily range versus the ATR? About the same as yesterday's bar, a little bit more, but the ATR is actually expanding because of this gap up relative to what it's been doing. So nothing out of the ordinary today, still above the rising ADMA. Nothing out of the ordinary, just one of those days for net, no reason to sell it. Last stock today, let's go to end phase, big leader, right? Didn't do it today, down 3.4%. While the S&P was basically flat, but TAN lagged today. So ignore question one. What was leading or lagging today? We know growth, we know value led, and phase is a growth stock. What is the sector doing? TAN had a bad day today, really across the board. Array was down 10% after its big move up. TAN, very strong sector, but what the sector do? Down 2.44% today. Got extended. It's a normal pullback for the sector. Also a normal pullback for end phase relative to what the stock is doing. What's the volume? Volume's okay, 13% below average. I'm okay with that. Is the price extended versus the moving averages? Not versus the ADMA, it really wasn't, and it's acting just fine relative to this nice channel that it's forming since its second day up. So nothing out of the ordinary there. What is the stock's daily range versus the ATR? Normal versus all these other candles that are next to it. And since the gap up, it's more volatile anyway. Is it lagging since purchase? It is not. We got it on a pullback day, and the way we've got a profit versus the indexes on it. I knew I bought it extended. It was the leader. I wanted to get in it. We had one dip below the ADMA, but this is acting fine. So those three stocks are really why we underperformed today. It was just one of those days. Some days growth lags. Sometimes it leads. Sometimes the leading sectors pull back. That's what happened today with TAN and with software. And with Silvergate, there was a crypto pullback also. So not really concerned. Let's do one more stock that underperformed today in the portfolio. Empower, really like this a lot. Quick check again. Leading or lagging, growth or value? This is a growth stock, value led. What's the sector doing? Semiconductors. Let's look at the SOX. SOX was down today, not as much, but it did have a negative reversal. So that somewhat explains what it did today. NVIDIA was down 1%, AMD was down 1%, GFS was positive. Empower actually underperformed relative to its sector today. So that's not normal. Well, it is and it isn't. You'd like to see it lead. It's not going to lead every day today, but it's not enough to make me sell the stock. Let's just say that. What is the volume versus the averages? Volume 24% below normal, so we'd like to see that. Is it extended? Nope, not really. Sitting right on the ADMA, not too far above the 21. Had a 3-day pullback before it bounced off the 21. Actually, I'm still looking at the SOX. Let me get back to Empower. Empower is a big leader here. Normal pullback to the ADMA, above the ADMA, outside negative reversal, but that's what growth and the SOX did today. Daily range versus the ATR, certainly longer than these three bars here. So a little bit longer than normal, but again, volume 15% below. Not a reason to kick it out. It's above the ADMA. So my verdict was it's just one of those days. No major red flags on the holdings that contributed to the underperformance today. another day in the life of a portfolio manager. We take it, we move on, we stick to our discipline, keep our stops in place. They haven't been hit, so there was no reason to blow something out. Don't panic. Put the hedge on because of the reversal at the 150-day moving average. We'll hedge. Hedge Apple, hedge Amazon. Amazon also underperformed today as it's into the 200-day moving average and had two reversals there. So another contributing to the laggard of the portfolio today. But all in all, 0.6% under down day isn't going to kill anybody and certainly not cause any significant damage. We still have some decent profits off the lows. That's going to wrap it. As always, feedback, email don@revereasset.com, phone 855-REAL-WEALTH. That's 855-732-5932. So any other charts that I wanted to show here? I don't think so. I think the in-depth review that we did there is sufficient. Maybe something that we're looking at on our watch list, TD. I'm enamored with big volume gaps up. So you can see that made a higher high, pulled back today. Almost pulled the trigger on this one. Changed at the last minute as we were starting to pull back, and we put the hedge on instead of it. Like that, I mentioned Array. Plug also down today, but this is a beneficiary of clean energy due for a pullback after the big day up on earnings. 142%, up 16% on its earnings day. So Plug added to the watch list. That's going to do it. Wrapping up Thursday, August 11th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.